traders and investors, welcome back to the Trend Trader channel. Today I want us to look into some of the people's favorite stock. Today I want us to discuss Aveng. I know that there are many people who are interested in the stock. There are many people who have covered the stock already. Also in this channel we have a video whereby I posted a video saying that now I was buying Aveng. If you haven't seen that video, make sure that you check out that pop-up button so that you can see the technical analysis and the reason for me at that time for buying Aveng. So now Aveng is currently trading between 4 cent and 5 cent. So there is a bit of a price movement, which is why I want to do the video today. But this video is going to be different than the video that we had initially. In the first video, most of the analysis came from technical analysis or from technical analysis perspective. At the end of this video, I will put in a bit of technical analysis, but what I want to touch on today is more on the fundamental analysis. So I will go through their financial statement with you. We'll just go to their website and then see what information is there, and then try to discuss what each information mean. I mean, basically I'll be telling you, if ever I look into the company annual report, what kind of information I'm looking for and how I use that information, maybe incorporate that information with technical analysis. So this is just something that I want to do for Aveng. As you know, this channel is more about technical analysis. The theme of this channel is technical analysis. So that hasn't changed. It won't change. But for someone who wants to invest, how will they maybe approach the company that they want to invest in using fundamental analysis rather than technical analysis? Like I said, most of the time I use technical analysis, but because I already know some things that I want to look at in some financial statement, I don't always look into the annual report, and I don't make my decision based on the financial report. I make my buy and sell decision based on the chart. But I can from time to time go to the annual report and see something there. And also these companies, they will have some report like the stock exchange news services, what is known as SENS. So if I already own a certain company and they release a statement, then because I already have a position in that particular stock, then now I'm interested on what the company is saying. I'm not necessarily interested on what other analysts are saying. I'm interested on what the company itself is saying. And also then I go back to the chart to look how this new information that is coming from that company, how it has affected the price action of that particular company. So today I want us, because I already have a position on Aveng. As I said, I made that video a couple of months ago, and then I bought Aveng. Recently there have been some talks on Aveng. Those who that we are connected with on social media, they already know that in the past few weeks I've made some comments about Aveng again, and then I added a bit on my position. So that is why I'm doing this video. But a disclaimer that I want to make is that for me, Aveng is a speculative position. It's not an investment position. For instance, if somebody invests, say 10,000, 50,000, 100,000 rand on Aveng, they might consider that as an investment position. For me, the reason of buying Aveng, it's more of a speculative. Yes, based on what I see on the chart, I'm currently bullish on Aveng. And also, I didn't take a large amount of money from my portfolio to buy Aveng. I only risked 1% of my total portfolio. So when I bought the first batch of Aveng shares, they were trading at 4 cent, or 4 cent is the price that I got from Easy Equities, because there are still some delay because of the liquidity on Aveng. So the average share price that I got at the time was 4 cent. So I'm happy that if Aveng goes down to 0, that's the worst case scenario. If it goes to 0, I'm not going to lose 4 cent. I'm going to lose the amount that I've invested in Aveng, because I didn't invest 4 cent. Let's say, for example, I invested 1,000 rand. So if from 5 cent it goes to 0, that means that in my account, that 1,000 rand will be wiped off. So that's what I mean when I say it's a speculative position. It's a 1% of my total portfolio. It's not that I've invested, like, say, for example, 10,000, and then say if it goes to zero, I'm fine with losing 10,000. No, 10,000 is too much for me to handle emotionally. So I can't afford to lose 10,000 rand in a single position. So that is why, for me, it is a speculative position. It doesn't change how other people, other investors or traders, other analysts, how they view Aveng. That is just my view. So everything, whatever that I'm going to share with you now, I need you to understand that it's only 1% of my total portfolio. And before I made that trade, I made peace with that 1% that it's gone. In case anything happens to Aveng, I've lost that 1% of my total portfolio, and I've made peace with it. Remember, I said in the market, investing itself carries risk. So it's one thing to know the risk that is there, it's another thing to accept that risk. And if you want to survive in the market and be able to deal with the roller coaster of the share price going up and down, you need to accept the risk rather than understanding that there's a risk. So I've accepted the risk. I haven't lost my money on Aveng, but I'm just saying, in the worst case scenario that it happens that I lose my money, I'm happy with it. So yeah, without wasting more time, let's go to the Aveng website and see what kind of information we're finding there. Now we are on the Aveng website. Basically, if you want to access the website, you go to aveng.co.za, and then now we are currently looking at the home screen or the homepage of Aveng. So there's not so much to say here, okay, about the business. So Aveng has two different kinds of businesses. Okay, first of all, Aveng is a construction company, or Aveng Group is a construction company. They are involved in construction. It's a different kinds of construction. There is some building construction that they do, and also there is another infrastructure building that they do, or infrastructure construction. So that's, in a nutshell, that's what Aveng does. It's a construction company. So the core businesses, as we know now, they have two companies. There's this McConnell Dowell, which is based in Australia, and then also there's this Moolmans, which is a South African company. So now if we look at this McConnell Dowell, we see that it's a major engineering, construction, and maintenance contractor. So they deliver different projects, and then they are based in Australia, New Zealand, Pacific Island, Southeast Asia, and the Middle East. And then also there is this Moolmans, which is based here in South Africa. And then they lead in an open cut contract mining across Africa, offering services in the mining value chain. So these are the two core businesses that they do. It's construction and some infrastructure development. Then also they have non-core businesses, which are also key component of the strategic plan. They are busy disposing some of these businesses. But what we see here, the non-core businesses that they are busy disposing, there is Aveng Water. On another day on Twitter, I said that I saw a guy that was wearing an Aveng Water jacket. Well, I didn't know that Aveng is planning to dispose Aveng Water. They've already sold the business. They sold it in 2019. There's Aveng Infraset, Aveng Rail. So all these businesses that you see here, they are already sold. Then let's look at this Aveng Greenacre with Railroad and LTA Ground Engineering. They made the announcement, but I don't see them saying that it has been sold. Okay, so some of the businesses have been sold already. Some of the businesses, there's just still in an announcement, they haven't been sold. Then there's some, they have their own strategic journey. So their strategic journey, among other things, it involves just trying to recover the business. As you can see, the business itself has a high debt burden, so they need to deal with the amount of debt that the business that they have. They also have a challenge of an unsustainable capital structure. So that is something else that they need to fix. And then also, this is the important point for me, is that they say that they have a weak share price that is significantly below the net asset value. So I don't know how to calculate the net value of a company, but for those who know how to calculate the net asset value of a company, they can exploit this because, as I said, the share is currently trading between 4 cent and 5 cent. So let's say, for example, you do a quick calculation, you find out that the net asset value of Aveng is say maybe 50 cent. So now we can see that at 5 cent per share, that's about tenfold or 20-fold below the price that it should be trading at. So I think that's what drive the more qualified people who know how to value stocks, and then they look at the share price to buy this company. It is because of this the share price trading far below the net asset value. Okay, South Africa in general, we are struggling because there is a slow economic growth. So I think this affects many other businesses. But I mean, even though we have a sluggish economic growth, there are some companies that are doing great. So it's not just the economy itself, it also brings us back to the debt burden of this specific company, because the companies that do not have debt, for example, they are in a better position compared to Aveng, because they don't have to worry about paying debt, whereas the country itself is struggling to grow the economy. So now, for them to recover, they are trying to do some capital restructure, and then disposing some non-core asset, and then focusing on the core businesses, improving that business. We saw that in terms of capital restructure. I think this year alone, I saw two rights offers by Aveng. Not sure about the first one. I think the recent one was about 100 million rent that they were trying to raise. So that is how they're trying to fix the business. So we can see that the business is trying to fix itself. So that is good. And then they want a consistent performance. How they want to achieve that is by optimizing the capital structure of the business. And then, okay, they said that the non-core disposal is complete, but as we saw that there are some companies that are still in announcement. So I think they're still working on that. We already know, if you've been following the news of Aveng, we know that the company that is in Australia is actually profitable, and then they want to restore profitability and restore the presence of the South African segment, or the South African subsidiary, the Movements. And then the end point is sustainable profitability. Whenever you invest in a company, you want that company to be profitable. So if the company is profitable, they'll be able to pay you some dividends, and probably more people will be interested in that stock, and then you might start to see the share price increases, which puts money in your pocket. So their plan for sustainable profitability is cooperation delivering long-term growth potential, and also delivering acceptable returns. So that is going to be good for the investor in the end. So that's just a bit of a nutshell. This might help someone who just bought the share because there was a hype. You heard somebody talking about Aveng and you bought Aveng. So this, I think it can help you to understand what is happening with the company. And then now, the focal point of today's video, I want us to look at the financial material of this company. So we see that in February 2021, they released the interim condensed financial statement for the past 6 months, which ended in December 2020. So they haven't released the financial year result. So there are two documents that we'll be looking at today. The first document, it's this interim result, and then also we look at the latest stock exchange news service announcement that they made on the 30th of June, which will be the trading update. So now, because they've released this trading update, we can expect them to, in the near future, to release the final result of that financial year end. So I've already downloaded these documents. So now let's go through each one of them. We are going to start with the one that was released in February to see what they said in February. Then we'll go to look at what they said more recently, now in June. So this is the interim. So interim is the first 6 months of the financial year end of a business. The companies in South Africa report result in semi-annually. So the first half of the year is known as interim, and then the final year, then they say it's a final result. So these ones that you are looking at now, it's the one for up to 31st of December 2020. So like I said, here from this website, you can download this PDF here. So that's what I'm looking at right now. So yeah, they in this they just reported it was a performance overview insight and then the financial performance. I want to focus more on the financial performance. But before that, there is a like sort of a summary. We can see that for the year 2021, there was a 15% increase in revenue compared to 2020. So this percentage variance, they compare it between the year 2020 and the year 2021. So whenever I look into a company's financial statement, I want to see the company that the revenue. So revenue, it's like the income, any money that is coming into the business. I want to see that money increases because it shows that the business is able to generate not necessarily being able to generate some cash. The business operation is bringing money into the business. So I want to see that amount of money increasing each and every year. So now we see the revenue, it increased by 15%. And then the operating earnings, they also increased by over 100%. We see that in 2020, it was 14 million rand. But in 2021, it was 280 million rand. So that is over 100% increase. And then the headline earnings, in 2020, there was a loss of 205 million rand, and then in 2021, there was a profit or positive earnings, not profit, positive earnings of 109 million rand. So here there's some, it's about free cash flow, operating free cash flow. Well, I'm not a finance person, but OFCF, it's about some cash flow. We saw that now they are saying that they had an inflow of 1.4 billion, which is very high compared to the 174 million that they had in 2021, in 2020. And then the cash position in 2020, they had a loss of 552 million, but in 2021 they have a positive, which is profit 579 million. But this includes some impact that they reported in F.I.R.E 16. So if you follow CA Twitter, a lot of people they talk about this F.I.R.E. Well, if you are not an accountant, you would probably say it's an IFRS, but they just say it's an F.I.R.E. But that's some professional politics. And then the book order, in this case, they reported it as work in hand. So they had about 26.8 billion in 2021, the amount of work that the customers want them to complete. So if they complete this work, they are in the position to generate about 27.7 billion, which is just an insignificant 3% increase. So that is just the summary. But the good point or the take home message from this is that the revenue itself is increasing, which is good. And then this cash flow here, it's a significant rise from 174 million to 1.4 billion. And then the cash position is increasing as well. So, like I said, because it's different companies, we already covered that the Australian division, it's around Australia, New Zealand, some Asia Pacific, and some East Asia and stuff there. And then the Mulmans, it's mostly in South Africa and some other African countries. They focus on mining. And then some business in South Africa, it's based in some of the major cities, Cape Town, PE. Okay, we no longer call it PE, it's Gqeberha. So I hope that they will fix that in the next report. Then we have Durban, we've got Rodekop in Germiston, and then Roslyn somewhere near Pretoria. So now they're looking here at the performance overview. I see they talk about Corona. For some people, this is important. For me, it's not that important, so I will skip that. Yeah, I will skip most of these things. But okay, from here we can see the revenue that is generated by each division. We see the green one, it's the McDonnell, and then the semi-greenish one, it's Woolmans. So the Australian segment of the business is so far is doing well. It's generating a lot of business or a lot of revenue for Aveng, so which is good. Yeah, so they're still trying to dispose some of the non-core asset from the different businesses. And then we see here from the headline earnings in 2019, they lost about 703 million. 2020 it decreased to 205 million, and then in 2021 they reported positive result of 109 million. So this is good. It shows that the company itself is recovering. Let's see what else that you want to focus on. Okay, I'm not interested in all of that. I want to reach the financial performance. Yeah, so that's what I want. So in the beginning, we looked at the overall summary of Aveng. So now you can see here it's a statement, the consolidated financial statement. They are talking about the comprehensive earnings of Aveng Group. Again, let's look at the revenue. They talk about the 12.8 billion revenue that they generated compared to 2020. They said that it was boosted by the Australian segment, and then there's a gross margin there. Then we look at the operating expenses. They decreased a bit from 886 million to about 735 million. So there was a bit of a shift off there. But what is important is the net operating earnings, which grew from 14 million to 280 million. And then they still have interest there because the company is suffering from debt. And then there are some impairments there. Then another thing that I focus on is the earnings or loss for the period. As you can see, in 2020, they reported loss. So they had a loss, but for 2021, they made a bit of earnings. Earnings, well, maybe earnings, it's not more like profit, but when you look at earnings, it's important to look at the actual cash that the business they have, because earnings, it's not necessarily cash, but there is a cash position that is more important than earnings. But what we see here is that there's headline earnings per share, meaning that there's value that is being added to each share. So for 2020, there was a loss of about 1.1 cent per share, but for 2021, there was a zero point 0.6 cent per share. So meaning that for the 2021 operations, the first 6 months, they actually put money into the investors' pocket. So that is why this is important. I just want to see that it's changing. In this case, it was negative, then now it's positive. That is good. But now for the final result, we already know that it is positive at 0.6 cent. So I would like to see this number increases, because then it tells me that the company is indeed recovering. Also, I want to see the increase in revenue for the for the final reporting of this company. Yeah, I want to see the revenue over 13 billion at least, because it shows that the company is still continuing to generate money. And then, okay, let me skip this for now. Okay, so here the company says that it is talking about working capital. Basically, working capital is the amount of money that a business is supposed to have to carry on the operations of the business, because we know that you can't do business without capital. So for 2020, they had about 3.076 billion. So now they have about 3.3 billion. That's a nice increase there. I think this is good. I'm not well versed with this kind of reporting. So for the stuff that I know, I'm not shy to say that I don't know what it means. For the stuff that I know that I'm interested on, then I'll be able to give you more information. But for the people who are familiar with these kind of statements, in the comment section, I will appreciate if you can add your inputs there. So another thing that I want us to look at in this one is the net asset value per share. Remember, they said that the share price is significantly below the net asset value. So from this statement, they've already calculated the net asset value per share for us, people like me who don't know how to calculate it. So it's reported in cent. Make sure that you keep that in mind. So we see that in 2020, the net asset value was about 9.5 cent. Remember, it's in cent, not in rands. So now the current net asset value that they are reporting, that they've calculated themselves for 2021, is 10.8 cent. So now you see, if we just say the trading price or the share price of Aveng is 5 cent, we are now halfway to the net asset value of the business. So the people who bought it at a significantly lower price are the people who bought Aveng at 1 cent, 2 cent. Fine, 5 cent is still half. It's acceptable for some people, but as soon as Aveng reaches 10 cent per share, then based on what they are saying here on the net asset value, it would mean that Aveng now is trading at fair value. So that is something that you have to keep in mind. So that if, let's say, for example, from today, in the next 3 months, Aveng reaches 15 cent per share, in terms of in rent terms, 15 cent is cheap for some people, but based on the net asset value of the business, then it no longer makes sense to buy a van at 15 cent per share, despite the fact that in terms of rent, in rent terms, it is cheap, but on net asset value, it's no longer cheap. So that is something that you have to keep in mind. So if you want to look for the people who like to buy companies that are undervalued, as long as Aveng is trading below 10 cent per share, according to their calculations, it makes sense to buy Aveng. It's still cheap or it's undervalued. So that's something that you have to keep in mind. So at least now we have an idea of the net asset value. And as you can see, this is a report that was released in February. At that time, the share price was 2 cent. So yeah, it was significantly undervalued, like 5 times undervalued compared to the net asset value that they calculated. But now, if you ask different fundamental analysts what is the net asset value of Aveng, you are definitely going to get different answers. So if you know how to calculate the value yourself, and then you'll be able to make a decision based on the number that you calculated and reached. But if you use either the number that is reported by Aveng or a number that is calculated by another analyst, you are just going to get different results. Whether the other analyst or yourself, you're going to find that the net asset value of Aveng is either below 10 cent per share or it's more than 10 cent per share. And then from that information, you will be able to make your own conclusion. But now I'm using the value or the figure that is given by Aveng itself. So now we know that as long as Aveng is trading below 10 cent per share, based on this report, it's cheap to buy Aveng or it's undervalued. Okay, so now let's move on. What kind of good information that I can look at here? Okay, let's just browse. Okay, now we are on some focus and outlook. Now we are going to look at the financial performance. Again, they say that their core revenue from their core businesses was about 10.5 billion, which increased from 6.9 billion in 2019. The operating earnings, they increased to 280 millions from 280 million from 14 million in 2019. The working hand or the order book, it's about 27.7 billion. And then this is the OFCF operating free cash flow. It's about 1.4 billion inflow. Well, now they're saying inflow. I don't know what inflow means, but what I see here, which is clear for me, is that it's an increase from 174 million to about 1.4 billion, which is good. And then they have this cash position of 579 million, which is a significant increase from a debt of 552. That is almost a 1 billion rand increase, right? So they have the headline earnings of 109 million from previous loss of 205 million. And then the headline earnings per share is zero point 0.6 cent. That's a recovery from the 1.1 cent loss that was reported in 2019. And then the earnings that are attributable to the equity holders of the parent, which is Aveng Grenaka, or Aveng, not Aveng Grenaka, Aveng Group, is 438 million. So now we're just going to be diving in on some of the other information that I focus on. So now this is where I usually look. Here we see it's a asset and liability statement. I don't know what an accountant called that, but when I look at the asset, I don't look at the non-current asset. I always focus on the current asset. Basically, the way that I understand it is that current asset, it's anything that the company can sell within 12 months. If ever, let's say, for example, they were about to delist or they are shutting down the company, It's all the amount of money that they can raise within 12 months. It falls under current asset. So from here in current asset, we see stuff such as inventories. Okay, Aveng is a construction company. If we use ShopRite as an example, the inventory would be the grocery that they have either in the warehouse or in the shop, the stuff that they still need to sell. And then there will be some cash there that they have. As you can see, there is cash and bank balances. And then if they are going to receive some money in a form of tax, some tax return and other amount that is due to them, that what falls under current asset. The non-current asset, some of the stuff is the tangible stuff, the stuff that we touch and see that is not so easy to sell within 12 months. So there, the most famous one is the PPE, the property, plant and equipment. So for example, Warren Buffett focus a lot on PPE because the business, like the property they own, well, not every business owns a piece of property, but some businesses they own a piece of property. So those are some of the stuff that hold the value of the business, because if the business has some property, we would expect that the value of the property will appreciate over time. So that is money that belongs to the business. So that's what we look at if you look at the property, plant, and equipment. So there they have about 2.8 billion under PPE. Goodwill. This one, well, depending on who you ask, what is goodwill? For example, the name of this channel is Trend Trader. So if Trend Trader is a brand, then goodwill of a Trend Trader. It's, I mean, that is goodwill of Trend Trader. Then the owners of the Trend Trader channel can decide what is the value of the brand Trend Trader. So goodwill is something like that. Like if you go to Apple, the name Apple itself is a brand. It's part of the goodwill, and then it can include other stuff such as the intellectual property of Apple company, or in this case, Aveng. So that's what falls under goodwill. So that is why I don't focus a lot on non-current assets, because it's the stuff that you can't convert to cash within 12 months. So what I want to see in this statement, I think this is called the balance sheet, where we look at the asset and liabilities. I want to see the value of the current asset against the value of the current liabilities. Remember, current asset is everything that you can convert to cash within 12 months. Same thing with liabilities. It's all the liabilities that are due within 12 months. So now, if the company folds, it closes, it needs to sell whatever that they are selling, use that money to pay off the liabilities, because the liabilities is the debt that the company has. So the difference between current asset, so basically there's something called net working capital. So the way that you calculate net working capital, it's current asset minus current liabilities. So if you get a positive figure, it shows that the company is sort of healthy. It can afford to convert some of its assets to cash and then pay off their immediate liabilities. So that is what I look for when I look in the balance sheet. I just want to see if the current assets are greater than the current liabilities. If that's the case, then I'm happy that the company is in a position to meet its short-term obligations. So in this case, we have the current assets here. We see this is the total of the current asset. It's about 6.033 billion. Then they still have assets that they are held for sale. Remember that Aveng is trying to dispose some of its non-current or non-core assets. So for the current assets alone, it's 6.033 billion that they have. So now let's go to the next page. Here we're looking at the liabilities. We're looking at the current liabilities is 6.05 billion. So now if you compare these two figures, if you subtract, okay, if you say 6.05 minus 6.033, we can already see that we're going to get a negative figure. So from this, we can see that Aveng is not in a great position to meet its short-term obligation. So it's no surprise that they keep on doing these rights offers so that they can generate cash. Hopefully they use that cash to reduce their debt. They don't use that cash to pay salaries to the executives. So yeah, from here we can see that okay, the company is not in a good cash position for as long as the current liabilities are greater than the current asset, then it spells a problem for the business. So now let's see the liabilities that are held for sale. That's about 1.643 billion. Let's see if it's greater than this. Okay, so now the asset that are held for sale, it's 1.927. This is greater than the liabilities that they have there. So I guess maybe if we look at the value, if you combine these two figures and then you find out that it's greater than the figure of the liabilities, then that changes the story completely. Because right now we're already aware that the assets that they still have them, then they're about to sell them, is greater than the asset. So that is probably a good picture. Well, I hope that if you combine those two figures, we are going to be left with a positive figure, which will be good for the business. Then here we have a cash flow statement. What do you call it? Interim condensed consolidated statement of comprehensive earnings. Basically, what I want to see in this statement, they usually most companies they start with the revenue, the money that came in, then they start subtracting all the money that left at the business bank account. So basically now we see they had about 12.89 billion that came in, then they start to subtract, then in the end you want to be left with a positive figure. If they are left with a positive figure, it means that the business is generating some money, not cash, money. There's a like what they start with is greater than what they, I mean, what they end with is bigger than what they start with. But if you go to the cash position, then it's a different story because uh, if you sell something and then you can count the inventory that you have in your business that you haven't sold, or you can count the stuff that people have bought but they haven't paid for. The money is due to you, but it's not in your position. So I think that's a simple definition or simple difference between earnings and cash. Earnings, it doesn't matter whether the money is in your pocket or not. As long as the money is due to you, it falls under earnings. Then when you report on the cash, you don't report money that is not into your pocket. So yeah, there are some videos on YouTube that explains the difference between earnings and cash. Some people they say that earnings it's like the stuff that you wish can happen. For example, we wish to see the companies that we invest on having rising earnings. So, yes, it's nice to see the company that the earnings are positive and they're rising. But what is even more important is that when you look at cash, the cash of the company is actually increasing. For example, at some point, I think Apple had about 200 billion in cash. So now if you compare company like Apple and company like Aveng, Apple is in a better position. Well, we're not comparing apples with apples because these companies are in different sectors. Apple is in tech and Aveng is in construction. But the point that I'm trying to make is that cash is king. Cash is more important than earnings. So I hope that is clear. Okay, so now in the end, we see that you are left with a positive figure from 12 billion. The cash is just getting chucked there up until to the point where the company is left with 509 billion. So you see, there are a lot of things that the company that they pay there. So yeah, that's the kind of information that I want to see. I just want to see that they have a positive figure there. And then sometimes there's something that they call earnings before interest, tax, amortization, blah, 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 all that stuff. So we see here they have earnings before financial transaction, which is about 645 million, and then their earnings before tax. So now they're left with 468 million, 468 million. Then they have a tax liability of 30 million. So if they subtract the two, then they have earnings that are 488 million. And then from this, there's a loss from continuing operations. Now I don't understand how they go from positive 438, yet they subtract 71 million, and then they come back to the positive figure. Remember, I'm not an accountant. There are people who can do a better job in terms of interpreting this thing. So they were in a better position to explain why we see that. But remember, it's 645 plus this 15, and then they subtract this 192, and then they are left with 468. Then their tax from this 468. The company tax in South Africa is 28%. So I think that's 28% of this 468 million. But somehow they end up with a positive 509 million. I'm not complaining. I'm not saying the books are cooked. I just don't understand how they arrived to that figure. So that's it that I want to see. So in this document, one of the things that I really wanted to see is the rising in earnings. The business is rising in earnings. The cash position of the company is improving. Then I want to see the difference between the current asset and current liabilities. As you saw that well, the current asset are less than the current liabilities, but the difference is slightly less. I think it's less than 20 million rand. But then we saw that the asset that are being held for sale, also the liabilities that are held for sale. And I saw that if we add the current asset plus those assets and the current liabilities and those current liabilities, it seems like if we calculate the net working capital, we're going to get a positive figure. So from this, we can see that the company financial is improving. We also saw that the net asset value of the company it's around 10.8 cent per share. Currently, the share price is 5 cent per share. So the company is still undervalued. If you want to make a decision, a buy decision based on that, you can conclude that it's sort of safer to buy the business now. It's not safe that you won't lose your money. That's something that you have to understand. All investing carry risk. Warren Buffett speaks about the difference when you buy a company that is trading way below its intrinsic value. So then you have that difference there, that cushion. That is what it means. That's the safety that I'm talking about. Not that you are not going to lose money. Investing carries risk. It's possible to lose money. Always keep that in mind. All right. So now we've done looking at this document. So now let's look at the recent announcement. Like I said, the one that I want us to look at is this sense announcement. So there's one, they made this announcement on the 30th of June 2021. So it's been about 2-3 weeks since they released this. So now what they say is that they reported positive headline earnings for this 31 December 2020. We saw that they had about zero point 0.6 cent earnings per share, and then which was the first profit since 2014. So if you've been holding Aveng since 2014, shame, Askis, you haven't made money. It's the first time in about 5 years that there was some money or value that was added for investors. So they said that this improved performance came from the Australian business, the McConnell Dowell, and then also this movements. Then the group positive performance has continued in the second half. So I expect that they will report a bit of a profit when they do the full year result that they're going to get there. Then there's a lot of information you can go through there, how they are saying the performance of each subsidiary, the Mulmans and the Cornell McDowell. Then they have different, there's also Trident Steel. So they say the steel segment has also reported a bit of a profitability there, which is good. And then for disposal, the group is still busy with the disposal of the non-core asset from the several smaller businesses, so they're able to achieve some of them. So this disposal achieved values in line with expectations, although not individually material as to require separate disclosure in the GSE listing requirements. Okay, fine, whatever that means. So in terms of equity, debt, and liquidity, so they concluded the rights offer and the balance sheet restructuring in March 2021. So they reduced the debt from 2.1 billion to about 1.1 billion. So basically they paid a debt that is worth around 1 billion. So which significantly removed debt in the group. So the remaining debt that they owe to South African lenders, they are still busy with renegotiation and they are still busy with the balance sheet restructuring, which is good. So we'll see that they say that debt is repayable in 3 years. So each and every 6 months, I hope that the business will be busy chopping off some debt. And then they further raised 100 million, which was more recent, that they concluded in the 4th of June, so which is good. And then obviously COVID-19 is affecting everybody. The story is incomplete without the company touching COVID-19. So that's it today. We covered the financial analysis or fundamental analysis of Aveng, something that we don't do in this channel. So we looked at the complete report for the first 6 months that was released in February 2021. And then also we look at the recent trading statement that the company released on the 30th of June. They say that they are still busy fixing the debt of the business. Then now we can go to the my favorite part, the chart. As you saw, as we just went in there, the share price dropped back to 4 cents per share. So I bought Aveng somewhere around March. Uh, so just a recap on why I bought Aveng in March. I said that the share price around June or July 2020, it attempted to trade above the 200-day moving average, but that was short-lived because around August, September, it came back to trade below the 200-day moving average level there. So now, from about September all the way to March 2021, it was just busy jumping up and down in the 200-day moving average. Then again in March, I said that we saw that there was a spike there in buyers, which pushed the price to go back above the 200-day moving average. So when we do technical analysis, what we do is price volume analysis. We look at price action. Price action is incomplete if you don't look at the trading volume. For example, we saw that the price, it pushed higher and then it closed above the 200-day moving average. So what we want to see there, we want to see that there are buyers who are actually pushing this price. It's not just a spike that is coming out of nowhere. So from March to about February, we saw the price being locked between 3 cents and 2 cents. And then again, just around April, we saw another spike there, a second spike. With that spike, the price, it pushed all the way up to 4 cents per share. Again, that's good. We see that with each price movement into the higher level, there are actually buyers who are pushing that thing. It's not just an artifact of the market. It's not happening on its own. There are people who are actually backing the stock with real cash, right? So now, once the share price was now trading between 3 cents and 4 cents, we saw that there was a golden cross there. So a golden cross happens when a slow moving average crosses, a fast moving average crosses a slow moving average. In this case, the slow moving average is the 200-day moving average, and the fast moving average is the 50-day moving average. So we saw that a golden cross happening there. Some people, they use this as a bullish signal, and then but it's just an incomplete story, but it's good to see that it was happening. So right from there, we have this golden cross happening there. We have that spike there to 4 cents that is accompanied by a large increase in trading volume. Then the share price started to trade between 3 cents and 4 cents for quite some time. And then recently in July, I think that is after they concluded the second rights offer of 100 million, and when they released that statement that they are still chopping off some debt. What we saw there, we saw that there was a large spike of buyers pushing the share price from 4 cents all the way to 5 cents. So currently the share price is stuck between 4 cents and 5 cents. So we will see when they release the final result of financial year 2021. I think I expect them to release them soon. I don't want to predict when they're going to release them, but I expect them to release them in the near future. So that was another reason for me to cover Aveng recently before I made this video, because I just copied this chart. I posted it onto my Twitter account and some Facebook group where I participate. with other traders and investors. So now I love to see that there's this spike in volume, which pushed the share price a bit higher. So that is good. That's what I look at when I look at price volume analysis. Every trade that I make is based on technical analysis. Today, I made an exception to go into the financial statement of Aveng and then to see if what I see on the chart is also sort of justifiable by the fundamental analysis of the company. Some people, they focus on fundamental analysis. Some people, they focus on technical analysis. Some people, they combine both technical and fundamental analysis, each to his own. You, as an individual, you need to use what you are comfortable with. If you use fundamental analysis, that is fine. If you use technical analysis, that is fine. If you combine both these two kinds of analytical techniques, it's also acceptable. There's no right way to do it. I really don't think there's a better way to do it. You just do whatever that you are comfortable with. So that's it. Now we see that the share price is above the, I mean, it's trading between 4 cent and 5 cent. We see that the 200-day moving average is rising, which is good. It's something that I want to see for a stock that is on an uptrend, and also the 50-day moving average is also on an uptrend. So I'm happy to see that it's happening there. Once again, like I said, every time the share price pushes high, I just want to see that there is amount of volume that accompany that price action that you observe there. So in terms of technical analysis, that's it that I wanted to cover today. And then if you want to connect with us, we have a blog there. If you go, just search a trend trader, but the blog is on Blogger. So Google has something that is called the Blogger. That is where I publish a blog regularly. We cover a lot of things there, a lot of topics. As you can see here, I was talking about technical analysis. We do different blocks, limitations of technical analysis in stock investing. We also do some stock analysis. Like you can see, we have this technical insight. And then there we talk about the companies, where the buy and sell levels that we are looking at. We also cover crypto. I don't talk about EC10 a lot, but I have a VALR account where I buy and sell. Okay, I buy because I don't trade crypto. It's either I buy it and I sell it when I exit my position. But we also do crypto analysis there. And then we cover different topics here. We're talking about SAP, Zenzele Gabili on Twitter. There is a lady called F.I.R.E. This image is from her Twitter account. If you look at this, the actual price of an IPO, we're talking about SAP Zenzele Gabili shares. In fact, on our next video, we'll be covering SAP Zenzele Gabili. So make sure that you subscribe to the channel so that you don't miss that video on SAP Zenzele Gabili. Then we cover a lot of things in this blog. Just search Trend Trader. The link to this blog is there on the description below. When you click it, it will take you on this blog. Like I said, we publish a lot of things there. We've got different blogs that we have there. You're just going to see what kind of information. And for the people who are traders who keep on blowing their accounts, we also have a blog, how not to blow up your trading account. It's on risk management. Okay, so if you have Twitter, you can go to Twitter, you can search. This is our official Twitter account, Trend Trader. So the handle is at Trend Trader JSE there. You will see with our logo there. You see we have about 570 followers. We don't follow a lot of people because we don't talk a lot, but we reply to everyone, to each and every person that engage us. As you can see on our Twitter, we post a lot of chats. I may not have a time to make a video or to post something on Facebook or to write a blog, but if you go to the Twitter, as you can see, we have over 4,000 tweets there. It's just chats. We retweet some good stuff that we find from other traders. As you can see, I also have an Apple position there. The yesterday tweet covering Apple there. Whenever I exit a stock, as you can see, I tweet some of that there. So if you have Twitter and would like to follow us, just go to Twitter and then go to @Trend Trader JSE. You will see our official Twitter handle there. Then just click follow. Maybe we'll follow you, maybe we'll not follow you. It will depend on the content that you are putting there. Then also, if you have a Facebook account, you can search for JSE Stock Traders and Investors. You will find us there. See, now the group has about 2,000 people. I'm one of the members of that group. So you can also join that group. As you can see, some of the stuff it's taken from the Twitter account. We have a lot of different things that we cover there. Shout out to Fred. Fred is one of the FinTweet people that helps a lot of people. We took this from his Twitter account to share with some people. So we do a lot of things there. We discuss stocks. If there's something that we see, we do touch about that. Some of the videos that you see on YouTube are uploaded there on that group. Almost all the videos that we have there are uploaded in the group. So if you want, if you have a Facebook account and you would like to connect with us on Facebook, you can just go to Facebook and search for JSE Stock Traders and Investors. We are members of that group. We don't own the group. We are just a member of the group. There are many people, as you can see, for now, there are about 2,000 members. So that is where you will find us. It's either you are going to go to our blog. We have a YouTube channel. Please click subscribe and click the bell notification. If you enjoyed this video, please like it so that the YouTube algorithm can make it available to many more other people. But also, you just on the description there, you will see we have that link to Trend Trader blog, and then you can also come to our Twitter. What do they call Twitter account? You'll find us there, and then also on Facebook, you can just go there and join the Facebook group, JSE Stock Traders and Investing. So that's it for today. Thank you. We hope that whatever we discussed today will help you to better make it or to make an informed decision when it comes to investing in Aveng Group. Like I said, I do have Aveng shares. It's a speculative position. It's not a lot. Whenever the company I see improvement on the charts, maybe it's breaking to new higher levels, I may buy the stock. I may or may not buy the stock, but as of now, as we saw that the net asset value, it's 10 cent per share. So as long as I see a good entry point and it's still below 10 cent per share, I'll probably be looking to keep on adding into that position. So that's it for today. I will see you on the next video. Make sure to subscribe so that you don't miss out on that SAP Zenzele Gabili update. Sharp.